let's say if someone sees an opportunity in LA or Detroit and they want to get a group of investors together, what steps would you have them take to make sure that they are buying in the right area and that building will actually be a success and they won't go into debt by trying to acquire a property while the commercial real estate market is down?
Well, I think they got to look at what the other uses are. So, for example, in a office building market, vacancy rates at 10% or below mean that's a healthy office market. There are very few markets in the country where that's the case. Miami is probably one of them. Miami Beach is the second one. And I think there are very few like that. So then you look at what's the apartment vacancy rates, and the apartment vacancy rates, what are they running? And if they're running vacancy rates on the apartment side, that is, maybe somewhere in the neighborhood of, 5% vacancies. And that's a healthy market. And in places like New York and DC and even Miami to a degree, these vacancy rates are even less. So New York's vacancy rate is less than 2%. So that would mean it's very conducive to having new apartments. And then once you look at vacancy rates and you look at rental rates, and if the rental rates, can support the acquisition and the conversion of a new building, then it makes sense to do, because you've got strong rental rates that are supported financially, and vacancy rates are low, which are showing a significant demand. And the same thing with hotels. I mean, you can look at converting office buildings into hotels as well. And so, but these conversions are not for inexperienced people. So they've got to make sure that they get a contractor that understands conversions, an architect that understands conversions. And then if they're going to do something to scale themselves as a group, then they want to hire a seasoned construction project manager that works for the owner or the investment group, and who has experience in conversions as well.
So to build the skyscraper in New York, like estimate, how much would that cost?
About $3 billion.
Okay. So how do you go about securing financing for these large scale projects?
Well, it's interesting. So the way you do this is you go to a group of banks, the traditional banks, the JP Morgan Chases, the Bank of Americas, the Wells banks and so forth. And you go to those banks to get senior financing. And that's a senior loan. And normally you're going to borrow between 60 and 70%. So let's use, just for simple math, that, you're going to borrow 70%. So 30% is going to be equity. And so 30% is $900 million. So of Affirmation Tower. So then you're going to go to a large global institutional, private equity fund. And you're going to go to maybe a couple of them. And they are going to put in somewhere between 80% or so of that, $900 million. So that would mean that the developer, our team, would have to put in 10%, which would be 90 million, to 20, which is $180 million. And so our group would put that up. Most likely, we would bring in a institutional general partner. They would come in and they would put in half of that or a little more. And so the developers, generally going to put in between $50 and $100 million between our group.
So when you're approaching, obviously Affirmation Tower is a huge project, but I know hospitality is something that you're well versed in as well. Last time we spoke with the UILU, you were talking about developing hospitality throughout maybe the Caribbean. What's the approach there? Because is it completely different when you're trying to develop in that space?
Not really. In fact, Affirmation Tower is going to be residential. If we get to build it, it will be the Civil Rights Museum, and then it'll be residential rentals with affordable housing of 40%. Then it will have 2 hotels, a boutique hotel and then an ultra luxury hotel. And then above that, on the top floors, it'll have luxury condos, and then an observation deck on the roof. So there's a big mixture of uses, because the building's a very big building, a few million square feet. And so mixing up the uses, it's like, consider a building being like a neighborhood almost. A building of that size is, like a neighborhood, so you're going to have a mixture of uses in that building. And that, helps drive the economics here. If you're going to do a one-off hotel, then the process is different, because the first thing you're going to need to do is determine who's going to operate the hotel, who's going to brand it, and who's going to operate it. And I wouldn't recommend building a hotel of any type, from either a 3-star to a 5-star hotel. I wouldn't do it without a brand. And then given that, normally it's a real estate entrepreneur who is building it, then you want the brand to be able to manage the hotel too, or to hire a third-party hotel manager that specializes in managing hotels. So you get a company that does that. And then after that, the exercise is pretty much the same as building a apartment building or an office building. The only difference is that you have to furnish the hotel. So you add another level of complexity, because you're hiring an interior designer and a furniture purchasing agent and the like, and the assembling of the furniture and the delivery of the furniture. And all of that has to meet the brand standards of your hotel brand and operator.